Hello everyone. So this is the pre-market analysis of 27th of July. See, things are looking stable and everything positive now. So we may be getting an opening of around 200 points. So that itself is taking out the gain. And otherwise, it would have been a buy on dip market. So if we were getting some flat opening or 50-point gap up, then it would have been a great opportunity. But since now we are getting around 200-point gap up, then there is nothing to do. It's opening close to 24,000, which itself was a resistance. So I cannot chase that rally because already 200 point and some selling can happen, but at the same time I cannot sell there also because the sentiments have turned positive, and we have seen Nifty already rallied till 24,600 in the last week only. So there is a possibility that it can still further go higher. 200 point can be 300 point also, but it's not worth taking that risk. As a seller, I can manage and I can plan accordingly. I can start with a straddle, I can do directional, I can do non-directional, I can keep shifting. But as a buyer, it is very difficult for you to trade unless you don't get a dip of at least 100 points. Don't chase this rally at 24,000. Otherwise, you'll have to wait for a proper clear breakout of 24,000, and then a retracement is something what you need to look for. So let's look at the scenarios. See, Friday, it was the 13th consecutive night of airstrike against Iran, and US naval blockade was also there, very active. And then Iran also retaliated, right? And Saturday, for the first time, nearly in 2 weeks, US military did not conduct any fresh airstrikes on Iran, and Iran also avoided its usual retaliatory attack against the US-linked military facilities in the Gulf region. So that basically marked the first proper military pause after 13 consecutive nights of escalation. Because of that, the crude prices have came down almost 5% and Brent crude from 97 to 91. WTI is around 85 also. But on the other side, Red Sea and Bab el Mandeb, the tension is actually increasing. There, it's Houthis. Houthis are the allies of Iran, right? Houthis, they are from, it's a Yemenis group. They attack Saudi Aramco related facilities near Jizan and Yanbu. It's very important facilities. That's one of the major oil export facility in Red Sea. And in fact, through Yanbu, Saudi Arabia can export crude without depending entirely on the Strait of Hormuz also. Therefore, on one side, if you see direct US-Iran conflict have reduced, but Red Sea and Bab el Mandeb tension is actually increasing. And you can say Iran is running a proxy war also because they are the allies of Iran, and you know who is supplying all these militaries, and even when they have such kind of weapons, you can assume, right? And Sunday, both US and Iran again maintained that military pause for the second consecutive day. Iran also indicated they will continue to pause as long as US did not attack. That means it's not an official ceasefire, it is more of a conditional pause. If US attack again, Iran may resume retaliation, right? So that is a scenario now, and US naval blockade is going on, and that may be to test the Iran's response. The US have in fact redirected multiple commercial vessels for verification. So direct military escalation have reduced significantly, and because of that, again, if you look at the crude price now, Brent came to 87, WTI is around 84. So from almost close to 100, it came to 87, which is very positive. Now, GIFT Nifty, if you look at it, it's almost 200-point gap up is what it is indicating. And if you look at US markets, Friday it closed negative, Nasdaq has closed negative, Dow Jones slightly positive. But now, if you look at the US futures, it's around very good positive. Dow is around zero point 0.5 positive, S&P 0.5 positive, Nasdaq 1% plus positive because the crude price is coming down. Global sentiment is improving. US futures is becoming positive because of all these gift nifties also. 150 to 200-point gap up, but don't chase it. Coming to Indian ADRs, HDFC ADR is slightly positive, ICICI is slightly negative, but IT, Wipro, and Infosys is so strong it looks almost 4% up. And there is something which is good related to the US trade tariff also for India that I'm not discussing, and pharma also excluded from this tariff. So that's again very good. Right, so market overall, if you see, there are a lot of positives. US-Iran tension have reduced 2 consecutive days. Brent crude has came down to 87 from 90, which is positive. US futures is trading very good positive. IT ADR is very strong, and India placed in the lower US tariff bracket, which is very strong. And pharmas in pharmaceuticals, right, they remain exempted from the tariffs. And GIFT Nifty is indicating 200-point gap up. But risk factor is the current cruise is actually fragile. The US continued testing Iran by redirecting commercial ship, and if Iran attack, then US can resume the military action also, right? So if US resume the military action, then the conflict will escalate further. If you look at institutional activity, FIIs were sellers, 4,000 crore last day, DIIs bought 5,500 crore. Of course, 26,600 it came, so that's a support level. will definitely buy. Institutions, DIs will definitely, mutual funds and all these will come and buy. That's the normal buying. And in fact, they fill the gap also that they created 2 months back, 23,600 gap. So that is good. And if you look at derivative positioning, 4% call open interest, 16% put open interest, because that's a support level. So put call ratio has improved from 0.79 to 0.88. Positioning, if you see, FIAs are net bearish for 15%, retailers bullish for 13%, prop traders are 2% bullish. So overall, FIA, they continue to maintain the bearish positioning. Prop traders have shifted towards bullish positioning. So these are the main points that I want to discuss. So don't chase the rally, even if you are getting the gap up. If you get the dip, that is better to buy, or a conclusive breakout of 24,000. And we are looking for the range for this expiry, 24,200 to 23,600 range. So let's see what is going to happen if 24,000 is broken, and then there is some positive cues which is coming from the geopolitical situation. It can go till 24,500 also. So tomorrow's expiry, it will be better if we get it in between 23,800 and 200. That range is what I'm ideally looking for. Extended range is 23,600 to 24,200. Okay, so see you guys. Trade responsibly, trade carefully. If you would like to trade with us together in our community, live with me, talk to our team, join the session. It's a learning program, mentoring program in the live market. So I see you there. Thank you.